It's 2022, and it's Angelo Christian Live, Angelo Christian Mortgage 2022. It's showtime, everybody. Thank you so much for watching the show and the channel with Angelo Christian. We really appreciate all your support and enthusiasm as we get ready to roll into 2022. We're here. We made it through the new year. I hope everyone had a great New Year's Eve celebration. Really appreciate all of you guys watching the show and the channel. I hope you guys had a great time with your family. Hope everybody's healthy, number one. Hope everyone is going to be wealthier, wiser, more successful, more benefits, more things for this year as we roll into the new year. I'm very optimistic and looking forward to a great 2022. And I want to wish all of you guys a successful, prosperous new year. So that's the big thing, is there's a lot of stuff happening, a lot of high expectations for America in 2022 as we emerge through this COVID treachery and want to go on to a happier life. You know, COVID right now, I mean, it seems like it's I don't know, it just seems like a bad nightmare, a bad dream, more and more people I know are getting COVID, and it's not going away. And I can't wait for the day. And I don't think that it's ever going to go away. It's a new flu, right? It's a new thing, and we're going to have to all probably get used to. And you just have to make the most of it and work on, making your life around it and creating your life around it. I don't know if it's ever going to go away, but I wish all of you guys the most strength, support, love, to get through this together. We will get through it as a nation. I know that we will. I'm confident that we will, and we'll emerge bigger, better, stronger. And so, my message here is to keep, pounding in, finance, real estate investments, credit, lending. We want to be your go-to, your choice, where America goes for funding for the last 20 years. So always remember, you can reach out to us, you can call us, you can text us at 832-431-6331. If you need any type of commercial or residential funding, we do FHA loans, we do VA, we do commercial, we do USDA, we do hard money loans, construction loans, jumbo loans, no documentation. You can search our website, our channel. A lot of people will come to Angelo Christian to get their loan. A lot of people are talking good about Angelo Christian because of everything he's done to help America, to help people, to transform and change their lives. And not everybody can say that. Not everyone's going to come out every single week on a YouTube live. And coming in we're starting this month is the Super Saturday live talk with Angelo. I'm working on getting that rolled out because I want to talk with all of you guys more and have a deeper connection with all of my fans, all of my subscribers, all of my customers, my vendors. So we're here for you. We love you guys. We support you. And we want to do whatever we can to help to make your life better, and money is a big part of that. Funding, finance, lending, credit, you need that. We all need money to keep things going, whether you're trying to get a new car, whether you're trying to buy a home, you're trying to get credit cards, you're trying to get furniture for your house. Money is very, very important. Money helps the world go around. It's not everything, and I don't believe it's everything, but, people need loans, they need credit to transition and help their life, to go to the next level. So anyway, we have a lot of stuff that we're going to talk about tonight on the show that I want to go over. Remember, you can always ask me questions. This is an open forum. You can ask me whatever you want to ask me. Any questions down below. And remember, we always give away free Amazon gift cards on the show. People that will give us 5-star reviews on Google. If you go to Angelo Christian Mortgage, you give us a 5-star review on Google, we'll give you a free Amazon gift card. Or whenever I ask the test question on the show, you answer the test question correctly, we'll give you a free Amazon gift card. That's just stuff that we do for you guys, being loyal subscribers and fans. We want to hook you up, take care of you, because you've given us so much support and watched us. And hopefully you've benefited, you've gotten educated by watching the channel. So that's why we're here, to serve, to deliver, to empower you, to transform your life. So with that said, the topics for tonight that I want to go over that I thought that were important was, the first thing is, why do realtors hate FHA? Well, you might hear this all the time. You might be a realtor watching this show. Why do you guys hate FHA so much? Why is there so much hating on FHA loans? That's the first thing that I wanted to talk about, because I think a lot of people FHA, they give it a lot of slack. There's a lot of issues with FHA, and I want to talk about that because I have a different opinion about FHA, as you guys may know, and so I do want to discuss that because I think that it's not given its fair share, and that we have to give credit to FHA. So that's one thing I want to discuss tonight. The second thing is a question I get every single week is how to get rid of PMI. Angelo, how do you get rid of PMI? What's the process? How do you do that? So I want to discuss how do you actually get rid of PMI, private mortgage insurance. You guys know what private mortgage insurance is. When you buy a home and you get a loan, if you don't put 20% down, you have to pay an additional insurance on top of your homeowner's insurance called private mortgage insurance. And usually it's about 0.5% to 0.85% of your loan amount. So it can be kind of expensive, usually a few $100s a month. So my suggestion is learn how to get rid of private mortgage insurance if you have it, so that way you can get a cheaper house payment. You can allocate those funds instead of wasting on insurance. You can put it towards your retirement or vacation or your kids' college or paying off debt. So the third thing is that I want to talk about is why you always need a financing contingency. Guys, if you're going to go under contract, it's very, very important that you have a financing contingency in place to protect you. Okay, I've had the last week maybe about 60 or 70 realtors try to tell me that their buyer didn't need a financing contingency, and I completely disagree with that, because your money's at risk, and if you don't have a financing contingency to protect you, could be an issue. Okay, so that's the third thing I want to go over. And then the fourth thing I want to talk about tonight is what is actually the best multifamily loan. What's actually the best multifamily loan? Is it FHA? Is it conventional? It's commercial? So I want to talk about what's the best multifamily product out there for people that are trying to get a multifamily, because a lot of people I see now, they're looking to invest in multifamily. They see the value in multifamily. They want to increase their mailbox money. They're seeing that real estate properties values are going up. They want extra income, and there's a big difference between conventional multifamily, FHA multifamily, and commercial multifamily. So I think it's important to talk about what is the best multifamily product, because there is a lot of our customer base are investors, and they're always trying to find out better loan programs, better strategies to leverage them to get the best financing possible. So those are the four things I want to talk about tonight. And again, remember, if you guys have any questions, feel free to message me, ask me, whatever. I'm happy to answer those questions for you. So remember, we're a nationwide mortgage company. We've been doing this for over 20 years. You can go to our website, officialangelochristian.com. You can Google us, Angelo Christian Mortgage. Our YouTube channel is Angelo Christian. Instagram and Facebook is Official Angelo Christian. You can check out all that stuff. Highly rated, best reviews, best lender in America. This is what we work on. We preach. We come here every single day to serve, to deliver, to make a difference. You can search our YouTube channel. We got a ton of content there to educate you, empower you, to teach you about credit, to teach you about finance, real estate loans, investing. We're here for you to make a difference. So with that said, the first thing that I was talking about earlier is, why do you think that a lot of realtors, they hate on FHA? A lot of times we'll get the call where the customer wants to go under contract. He's like, well, the seller and we don't want to do an FHA loan. We just want to do conventional. We're like, well, why don't you want to do an FHA loan? Because the customer qualifies for FHA. It's less money down for them. They'll get a lower interest rate, and they don't have all the credit requirements that conventional is going to require. So, and I'm like, look, our client is approved for FHA. That's a better loan for him. Conventional, they're going to want 20% down, but FHA, he only has to put 3.5% down. So if he's buying a $500,000 home, with conventional, he has to put $100,000 down. With FHA, he just has to put $20,000 down. And he only needs a 620 credit score for FHA, but conventional, you have to have usually a 700 plus. And so it's problematic to our client because he only has a 630 credit score to try to make him go conventional. But the realtors will push on this because they have a preconceived notion in their mind that there's so many rules and regulations with FHA that it will kill the deal in underwriting or with the appraisal, and that the seller, they won't be able to close the transaction. The seller will be upset with them and then fire them, and they'll lose their commission. And the thing is that I want to talk about this because there's a huge disparity between FHA and conventional loans as far as the requirements. Okay, with FHA you can go up to a 56% debt ratio. With conventional, you're lucky if you can get a 43% debt ratio. All right. With conventional, I know they say they advertise they go down to 620, but in reality, you're not going to really get most conventional loans in with at least a 700 plus credit. So what about all the people that want to buy a home between 620 and 700 scores and they don't have 20% down? That's why the FHA program is here. So I just think that, I love FHA. I think it's a great program. I've helped thousands of people to buy a home with FHA. I have nothing against conventional loans, but not everyone's going to qualify for a conventional loan. And my point is that it's not fair to American people, that you say, well, I don't want to sell a home to you because you don't qualify for conventional. Hey, Kevin, good evening. Thank you so much for watching the show on the channel. We appreciate you. Happy New Year, Kevin. So I don't think it's fair that you say, well, I'm sorry, you don't qualify for conventional, so I'm not going to sell my home to you. That to me is not right. If somebody qualifies for that home and they qualify for that FHA loan, you need to sell them that house and make that loan to them. You can't say, well, because it's FHA that it's something bad, or he's not good enough, or his credit's not good enough. None of that stuff matters. It's not fair that somebody says that. A lot of realtors, they'll say, well, FHA appraisals are too strict, my seller doesn't want to do it. And there's not really anything bad about an FHA appraisal. Really, it looks out for you as the buyer in your best interest, because they don't want you buying a shoddy house. If the house has broken windows or chipped paint or has hand railings that are missing, yeah, those things have to get fixed. But don't you want that stuff fixed anyway? You don't want to buy a house that's all messed up. So it's not like it's something that is bad for people. And so I just think that because there's so many people, millions of people that have below a 700 credit score that don't have 20% down. So it's not fair to deny them housing and say, well, just wait until your credit gets better, or wait until you have 50,000 saved, because that's ridiculous. It takes the average person 13 years to save for a 20% down payment. Are we saying that those people should just rent for 13 years? I don't believe that. I believe that people if they work hard and they can afford their house payment, they deserve to own a home. And they don't need to be denied access just because someone doesn't feel like writing a contract for an FHA loan, even though they qualify. There's not much difference on the appraisal with FHA and conventional when you boil it down. There's a few small things, but it's not enough to not to do a deal. So I want to talk about that because a lot of realtors, a lot of sellers, a lot of brokers, they hate on FHA, and it's not fair. It's gotten a bad rap. And it's really, really a good program. And again, nothing against conventional. I love conventional loans, but not everyone's going to qualify for conventional. So I don't want you to think in your mind, have a negative stigma that if you can't get a conventional loan, that you should just sit on your thumb on the fence and just rent for the rest of your life until you get a 700 score and you have 20% saved, because that's not right either. Okay. So FHA is a great program. We go down to a 620 credit score for FHA. The new loan limits for FHA are up to $435,000. High balance in some areas, $800,000 for FHA. So it's a wonderful product, and we're very proud and pleased to be able to offer that to you guys. So that's my 2-second opinion on FHA, and I know everyone's got a different opinion about it. That's how I feel. So anyway, if anyone has any questions about that, by the way, please feel free to message me down below. If you have, I want to know what your opinion is about FHA. Maybe you have a different opinion. Maybe you don't like the way I think about it. That's okay. There's nothing's personal on the show. It's a very open forum where we're very transparent in how we feel. So, it's just how we talk about what's real here. So, the other thing I want to talk about is now moving on to the next topic is PMI, private mortgage insurance, which is on conventional and FHA loans. So does everyone know here what PMI is, private mortgage insurance? So private mortgage insurance is a mortgage insurance that's enforced by the lender to protect the lender that's making the loan to you. Why is it there? Because the statistics show that people that don't put 20% down have a higher likelihood to default. And so for government loans like FHA, hey, good evening, Decent. What about the first-time buyer? Is that owner truck driver? I'll talk about that. That's a great question, first-time buyer on truck drivers. Hey, good evening, Big J. I hope you're doing well. Thank you for watching the show and the channel. We appreciate you. So, government loans like FHA have private mortgage insurance, and you have to pay it's 0.85% of the loan amount. So if you have a $200,000 home, you're going to spend about $140 a month for mortgage insurance with an FHA loan. Now, conventional loans have mortgage insurance too, but when you hit 20% equity or 80% loan to value, then you're not going to have mortgage insurance because the lender has perceived that there's less likely that you're going to go into foreclosure, less likely of a default. You're going to make the loan, you're going to keep the payments. And so they remove that mortgage insurance. And the mortgage insurance is there in the event that you go into default, that the lender is paid off. Are you still doing Amazon? Yes, we are. Yes, if you give us a Google review, just text me your review to 832-431-6331. Go to Angelo Christian Mortgage, give us a 5-star review. Send me your email and we'll hook you up and give you an Amazon gift card. Absolutely, Chris. Don't forget Angelo Christian Mortgage on Google. So anyway, and we'll always give those out forever. Forever and ever and ever, we'll give out Amazon gift cards for Google reviews. So for you guys being a loyal subscriber, a loyal follower on you with us, and us taking care of you and serving you, we'll always take care of you. That's how we look at it. So, anyway, on the PMI is there. If you go into default, the lender is paid off. So it's insurance to the lender, and the lender makes you pay for it. And the government makes you pay for it with FHA. So it's not a bad thing, but it's their design to protect, the insurance company, because they want to make sure that you make good on the loan, and if you don't make good, they're going to get paid off because everyone's worried about the risk. So that's what it is, just insurance. That's what PMI is. And but when you have 20% equity with conventional loans, you can get it removed. Now, the downside about FHA, and there is a downside, is that mortgage insurance stays on there forever. Can I cash out, refi into a conventional loan once my equity hits? Yes, cash out on conventional. Yep, I'm going to answer that question, Big J. So I'm going to answer those questions. Just give me 1 second. So the downside to FHA is that it does have mortgage insurance, and it's on there forever. The only way you can get rid of the PMI with FHA is if you refinance through conventional. So how do you get rid of the PMI? On an FHA loan, you have to refinance to conventional. You can't just take off the PMI on an FHA loan. You have to refinance to conventional. That's the first thing. If you have a conventional loan already and you need to take the PMI off, you generally have to be on the loan for at least a year, make your payments on time, never have been late with the conventional loan. Then you can call up your lender and say, hey, I've had this conventional loan for a year. I'd like to request to have the PMI removed, and I've not been late on my payments. Then it's up to the lender to decide if they're going to remove the PMI. Generally speaking, you have to have been on that loan for at least 2 to 3 years before they'll do it. Sometimes they'll do it within a year, but you have to contact them, go through their application process or whatever they want you to do. Sometimes they're going to order a new appraisal on the house. Now is a better time than ever because appraisal values have skyrocketed. You probably have 20% equity in the property and you can remove the PMI. So you call your lender and say, hey, look, I've been on this loan for a year. I've made good. please remove the mortgage insurance. Hey, Nick, good evening. Happy New Year. Happy New Year to you too, man. Thank you for watching the show. So you will call them up, say, look, can you remove the PMI? Then they're going to do their review, their assessment, and they're either going to approve you or deny you for it. And then if they deny you, just tell them, give me the feedback why I get denied, and then work on reapplying later. That's all you can do. But you know, some people's PMI is a few $100s a month. It's expensive, and so it's a waste of money to a lot of people. So the idea is, you know, let's get you off the PMI. Let's get rid of the PMI so we can save you money. Okay, and that's how you do it. You either, if you're on an FHA loan now, you got to refi to conventional, or if you're on a conventional loan, call your lender and ask them to request to remove the PMI. And you don't have to do a refinance to remove the PMI. You just call your servicer, request it, and then they'll most likely take it off for you. I don't know the time frame. I don't know what your specific situation is. Again, they can do their own evaluation and approve it or not, but at least it's worth a shot to try and save you the money. So that's the solution on how to get rid of PMI. Now let me answer these questions. 2 questions popped up. I want to answer these questions real quick. The first one was first-time buyer for truck drivers. Okay, so this is the thing. I get this question all the time, and it's a great question. There are first-time buyer loan programs, as you know. There's first-time buyer programs, and then there's self-employed truck driver programs. It's 2 different loan programs. You have the first-time buyer, and then you have self-employed or truck driver or self-employed loans. It's 2 different type of loans. Now, unfortunately, as of today, 2022, hey Bruce, good evening, buddy. Appreciate you, man, for watching the channel. Unfortunately, in 2022, they don't have a first-time buyer truck driver loan where you can mix the product like that. Okay, so unfortunately, as of today, you can't do a first-time buyer and a truck driver self-employed at the same time. Now, what you can do is you can do a first-time buyer program and get closing cost assistance, down payment assistance, you know, that type of thing. And you can be a truck driver and you can get that assistance. All right. Now, you're going to have to show your tax returns to get that loan. All right. For the first-time buyer program requires tax returns. You can't do no doc on a first-time buyer. You can't do no doc on a you know, down payment assistance or FHA loan. It has to be full documentation with W-2s and taxes. So this is a very important distinction. Now, the other option, you can do a self-employed loan where you just use your 1099 or your bank statements to qualify you for a truck driver loan. If you work for a trucking company or you have your own rig and you want to use your 1099 to qualify, that's fine. Okay? But you have to choose one or the other. You can't do both at the same time. So I hope that answers your question. So it's a great question. It's just those. Now, in the future, could that change? Can that change? Absolutely. Can you see a non-QM or no documentation first-time buyer? It's certainly possible. You know, I don't know when that's going to happen, but it is possible. Okay, so it's a great question, and we get that question a lot because self-employed people deserve first-time buyer programs too. You're welcome, Deshaun. Thank you. So the other question that was asked was cash out. Can you cash out when you have 80% loan to value, 80% LTV, or you have 20% equity? Can you take cash out? And the answer to your question is yes, you can, but you got to remember on a cash out loan, the maximum is 80%. Okay? So the maximum is already there, 80%. So if you're at 80% right now, that means you don't have any room or equity to take money out, and that you're not going to really get any money. So you need, if you really want to, you know, for example, if the house is worth 300 and you owe 240, well, 80% of 300 is 240. So even though you really have 60,000 of equity there, because 300 minus 240 is 60, unfortunately, you don't have enough equity to do a home equity loan. Because remember, on home equity loan, you can only go to 80%, whether it's a HELOC, a cash out refinance, a home equity loan, All these are capped at 80% loan to value. So even if you're at 80%, you don't have enough equity, you need to be at 50%, 60%, 40% loan to value, and then you can cash out and take money. The requirements are you have to have at least a 620 or higher credit score. You can do either full doc, no doc, or bank statements. No mortgage late payments. They don't like mortgage late payments. That's a big no-no in the industry. Trying to get a loan on a new mortgage and you have late payments, it's a hard sell to an underwriter. Okay. So those are those. I hope that answers those questions for you. So anyway, yeah, those are great questions too, by the way. So remember, guys, if you ever need help with loans, we're open 7 days a week for you. One of the only lenders in America. Have you done videos on how to network with people? I want to how to network because your network is your network. That's true. That's a great question, Chris. The thing, Chris. So let me say this. I've tried to keep the show really, and it's funny that you say that. I mean, I think it's a great topic, and there's a lot of people that talk about networking. And I will say something about networking here. But I've tried to keep the show very related to what we do, and not get too off topic. And there's a lot of people on YouTube, they talk about all kinds of stuff just to get viewers. And that's not really my thing. I'm not here just to get viewers. I mean, we're a real legitimate mortgage company. We make loans to people. And so I talk about a lot about what we do. But sometimes there's things that, we are coming out with a lot of stuff, in 2022, and we have a lot of stuff that we produce that I think that's cool, that shouldn't just be about the topic. Like things that I love, like I love cigars, I love whiskeys, I love restaurants, so we want to talk about those things on the show and feature those things, right? We love to network with people and do networking events. And so, good evening, Pink Lady. Hope you're doing well. Thank you so much for coming on. So, networking is a very important thing. The one thing I do want to say is that one of the things I think that a lot of people, including myself, where we get lost sometimes in the fray, is that we think networking is more important than doubling down on ourselves and working on us to be better. I think that if you focus, like for example, if I would have focused on me more, becoming the best at what I was, I would attract a network. Because no one wants to be around, you don't know. So the thing is that if you want to network around successful people, they want to make sure that you have the clout or the ability to even be in their space or their network. So what I always tell my team, in life, you get what you deserve. So you get what you're welcome, Bernard. Appreciate you, brother. Thank you, man. In life, you get what you deserve, and I'm saying that not everybody does. There are some things that are unfairly treated, but what I'm saying is that in order to get what you want, you have to deserve it, and you should become so good you can't be ignored. If you become so good you can't be ignored, then you are going to attract a network. People are going to want to be around you. Okay? But what you don't want to do is just start purposely trying to network with people and then you don't have anything to offer, is what I'm trying to say. Because people are, they're not going to go for that. You're not going to network with a $100 million man or a $1 billion guy and then he's like, well, what are you doing here? You have to have something to offer to the table. I'm sorry, I missed that question about that, but what I'm getting at is, Chris, in my opinion, that's my opinion, and everyone's entitled to their own opinion. I think what I'm saying is focus on you, become the best at what you're doing, and you're going to attract everyone you want to. Okay? Don't be the guy that is just trying to network with everybody, and then you don't know what's going on. You have nothing to offer. So I'd say that's my suggestion on networking. Become very good at what you do. Be a master in your space, become the best, and then you can go and try and network with people. Okay? And a lot of people, they do the opposite. They try to go to every event, every show, and then someone asks them a question, they can't even answer the question. And it's going to be really hard to network like that if you don't have substance. So anyway, it's a good question, and I think it's important. It's a valid question. Just you know, just make the most of yourself and create a lot of value. You have to create a lot of value to people. Okay, so anyway, I think someone asked a question here earlier, and I missed that question. I'm sorry, about 5-month deferment or something like that. I don't know what the question was. But yeah, remember, we're a nationwide mortgage company. You can call or text us at 832-431-6331. We do all kinds of loans. Remember, nationwide, we're open 7 days a week, and we're giving away free Amazon gift cards to you guys if you leave us a good review on Google. Go to Angelo Christian Mortgage, leave us a good review. We'll hook you up with that free Amazon gift card. Just text us your review to 832-431-6331. We'll hook you up with that free Amazon gift card. Going into the financing contingency. And when you're buying real estate and you're going under contract, a very, very important thing to talk about and to have in place is a financing contingency. What is a financing contingency? Why do you want that? When you go under contract to buy real estate, I don't care if it's $1 billion building or a $100,000 house, you're going to sign a contract. In that contract, there's a lot of stuff, a lot of legal jumbo, a lot of legalese, and some of that stuff is not there to protect you. I had a realtor today trying to make someone put up $20,000 earnest money without a financing contingency, and I said, look, I don't agree with it. Because if for whatever happens, if the loan doesn't go through, that buyer loses his money. So whenever you go under contract to buy real estate, you have to put money down, earnest money, good faith money. And if the deal doesn't close, you lose your money. Okay? Now, but if you have a financing contingency, that's the key word, a financing contingency, meaning that you're protected. If anything happens, the deal doesn't go through, you get your money back. And I can't tell you how many times people will call us crying on the phone that they went under contract, they put up $5 grand, 10 grand, 20 grand, 100 grand, and they lost their money because the loan didn't close. Don't let that happen to you. Okay, do not let that happen to you. Refuse it. Do not sign the contract unless it has a financing contingency. That means it allows you time to let the loan be approved, to let the loan go through. Usually that's 3 to 4 weeks. Some loans 2 months. Minimum 3 weeks, as much as 2 months to let the loan get approved. In the event the loan does not get approved, is it possible to cash out refinance after deferment? That's a good question, Big J. For FHA, they want 12 months after the deferment. You might be able to do that with conventional. With us, we'll allow a cash out after 3 months on conventional. FHA is 12 months for cash out after deferment. That's a great question. Great question, Big J. So cash out on deferment, FHA requires 12 months, conventional is 3 months. So you have to be out of deferment, can't miss any payments. Non-QM and conventional 3 months. FHA right now is like 12 months. That could change though later. That's a good question. I like that question. So, but yes, have a financing contingency, protect yourself in the contract. Remember that you got to protect you, look after you. Not everyone's looking after you. And you got to make sure in that contract that you have that in place. Financing contingency. Okay? So now moving on to the other topic I want to talk about is multifamily. Something that we are very passionate about here is real estate investing and making your money work for you. And that's with multifamily. So there's 3 main multifamily loan programs that are very prevalent in the United States that are very popular. There's FHA, there's conventional, and there's commercial. And they all have different requirements, okay? So and FHA can only be used for primary residence. So on a multifamily, you have to live in one of the units for FHA. So you have to occupy, if you buy a 4 unit, and that's the maximum you can have for FHA is a 4 unit, you have to live in one of the units. Now conventional and commercial, you don't have to live in the units. You can do a complete investment or you can occupy one of the units. The big difference is with FHA is that you can buy a 4 unit and put as little as 3.5% down. So only 3.5%. But like with conventional and commercial, you have to put at least 25% down to get those type of properties. So if you're buying $1 million multifamily, you only have to put 35 grand down with FHA, right? But in a conventional, you'd have to put 250 grand down. Commercial, you'd have to put 250 grand down. So big difference in the down payment. But remember with FHA, you have to live in one of the units. So the other thing is that the underwriting is a little bit different on all of them, okay? You have to get an FHA appraisal, obviously, for an FHA loan. Conventional, and all these properties require inspections. They require appraisals. All these programs, you have to have at least a 620 or higher credit score, no bankruptcies or foreclosures on your record in the last 4 years. All of these are fully documented loans. Now, we also have no-doc multifamily. If you want to do no-doc multifamily, we have that just for investors. And that's the fourth program that's very popular. You can buy as many multifamily as you want with 25% down. Okay? So very, very popular loan program too. But one of the things the biggest thing that they're underwriting on these properties is the debt service coverage, which is basically the rental income against the debt of the property. And the property has to be thrown off enough rental income, generally at least 25% or more than the debt. So if you're buying $1 million property, excuse me, and the rent is $10,000 a month, that means that the mortgage, the taxes, the insurance, the maintenance has to all be below how much? $7,500 or less. They're not going to finance a property to you where the rents are $7,000 and the PITI, the mortgage, the tax, the insurance, the maintenance is $10,000 because you'd be upside down. Nobody's going to do that. Now, there are loan products that we offer that have no lease verification, no rental verification, no debt service verification. If you have over a 700 score and we do a non-QM loan for you, a no-doc loan, then that calculation is thrown out the window. So that's a very, very strong program, a great program for you guys out there that are buying rental properties where you have a low cap rate. If you have a low cap rate or you can't verify income or leases, that's a wonderful product if you have a 700 plus credit score. You don't have to verify rental income. And I'm a big advocate of that program. We do that for non-QM investors nationwide, guys, on duplexes, threeplexes, quadplexes, no documentation loans, multifamily. They start on the duplex with 15% down, triplex and quadplex is 25% down. No income check, no rent check. Okay, very, very strong program if you're an investor wanting to buy a property. So, and you can do that on purchases, refinance, cash out. You can do that on a lot of different programs. Now, obviously on the FHA, that's the only one that has to be a primary residence and it's fully documented. But the cool thing is you only have to put 3.5% down. All these programs do require reserves. You ideally have to have 6 months plus reserves, cash reserves. Remember, the reserves is the PITI, your mortgage payment, and you have to have 6 months of mortgage payments in reserve. That's generally what the lenders are looking for, is 6 months of reserves. So don't forget that that's a very important thing. You have to have 6 months of reserves in your bank account. You also have to have funds for closing. Closing costs are usually anywhere from 2% to as high as 6%, depending on the state, depending on the type of loan product that you're doing, depending on the loan amount. So these are really, really important things that you have to have funds in your bank account for. If you're buying $1 million multifamily and you're doing FHA, you have 3.5% down for the down payment. The closing costs are probably going to be about 2%. So that's 5.5%. So you have to have $55,000 down. Then you have to have about 6 months of reserves, which is probably going to be another 30 grand. So you have to show in your bank account at least $85,000 to qualify for that FHA loan. Those funds have to be in your bank account. So, I say for primary residence, the best multifamily, in my opinion, is VA and FHA for a primary residence. VA is 100% financing, no money down for a VA multifamily. And there's no loan limit, there's no location restriction, there's no down payment requirement if you're a veteran. You do have to have previous rental property experience, but the VA multifamily is number one, the best. Number two is FHA for primary. For investors, the best one is going to be, conventional, and then non-QM. If you can't verify your income or you can't verify the rent, go conventional if you can, because the interest rate is going to be a little bit lower, around 3.75%. Non-QM is going to be around 4.5%. But if you can't verify the rental and you can't verify your income, go with a non-QM option. That's the second best option for you. So those are my favorite multifamily loans. We have all those programs. We offer all of them. So if you're thinking or dreaming about owning your own multifamily investment property, we can help you to make that happen with Angelo Christian. I want you to think of us, call or text us at 832-431-6331. That's why we're here, to help and serve you guys. So please reach out to Angelo Christian. Remember, you can always leave us a 5-star Google review on Angelo Christian Mortgage. We'll hook you up with a free Amazon gift card. Just text me at 832-431-6331, and then we'll send you out that gift card. That's why we do that. We hook people up with those free gift cards. And also, let me ask for tonight, just to finish up on the test question, because I was going to give away another Amazon gift card to the lucky winner, whoever answered the test question. So who can remember tonight on the show what we talked about? Who remembers what a financing contingency is? Whoever answers that first correctly will win the Amazon gift card. Who remembers what the financing contingency is? Does anyone remember what we talked about at the beginning of the show, the financing contingency? If you can answer, whoever remembers that first, about the financing contingency, whoever answers that first will win the Amazon gift card. I just want you to type in, tell me what is a financing contingency. If you can tell me what that is, then we'll hook you up with a free Amazon gift card. All you got to do is text us your email to the 832-431-6331, and then we'll hook you up with that free Amazon gift card. Do you guys remember what the financing contingency? Who remembers what that is? Please tell me down below if you guys can recall what the financing contingency is. Who remembers? That's right. You got it, Gianni. Good job, buddy. Good job. You got it. Awesome. Text me your email address. Leave me a Google review, and we'll hook you up with a free Amazon gift card, Gianni. Text us to 832-431-6331. Remember, we work very hard for you guys. We produce great content on the show. Monday, Wednesday, Friday, Saturday, new shows come out every single week. You can check us out on the web, Angelo Christian Mortgage. Google us. Go to our website, official Angelo Christian. We appreciate you guys. We love you. We want you to make the best 2022. Take care. Peace out. Make the most of yourself. We'll see you guys next week. Bye-bye.